Hey, I'm Joe Soto, your favorite loan guy, and today we're going to dig in to one of the biggest questions and pieces of the mortgage lending process, and it's something that we call a DU or a desktop underwriter. And we're going to break it down. We're going to walk you through it step by step and show you exactly what you're looking at. So, for those of you who don't know what a DU is that desktop underwriting. And basically, this is a program that's linked to Fannie Mae, right? Fannie Mae is one of the government entities. There's Fannie Mae and there's Freddie Mac, which lend money, right? They set the guidelines for every bank. Every bank in the country is utilizing what we call DU or desktop underwriting. And so DU is for Fannie Mae, and it's going to tell the underwriter exactly what is needed to approve a loan, right? So it gets run through, and unless you have a DU approval, there's nothing for the underwriter to work on. Here's the biggest problem with DU: is DU is only as good as the information you put into it. I could put that Joe Soto makes $1 million a month and can qualify for a $10 million house, right? Because it's all data entry. So how do you know if a DU is legit versus a DU is kind of fake, right? What do you like? How can you tell? I'm going to give you some tips on that. But it truly is only as good as the information that you put in there. So sometimes loan officers will say, I have DU approval. Then you start looking at it and you're going, I don't know. Is this like, how do I know if this is real or not real? So we're going to walk you through what an actual DU looks like from start to finish so that you know as a consumer or as a real estate professional if you're looking at something that is legit, and I will give you what the red flags are, okay? So first thing you have in here is mortgage information. One thing you want to pay attention to is the housing expense ratio and the debt to income ratio, right? Every loan program has different requirements for this, right? Conventional loans are different than FHA, different than VA, different than jumbo loans. I will tell you that right off the bat, on a jumbo loan or a non-QM loan, you don't have to run a DU. If you're doing a bank statement loan or a debt service loan or a P&L only loan, there's no DU involved. It's only going to be involved in conventional FHA and VA. If you're doing a USDA loan, it's a different system called GUS, which we're not going to go through today. So you can see your housing expense ratio, right? This is what percentage of their income goes towards housing. And then this is debt to income, which is housing plus debt, right? Two different numbers. We call it a front end ratio, back end ratio. Typically on a conventional, you might be able to get to 49% on this. On FHA and VAs, you can get into the 50s. But what we're looking for, as far as a recommendation, and I went back a little bit, sorry, is we're looking for approve eligible. Anything other than approve eligible, is not good, okay? Cancel Christmas. Refer, caution, not good. We don't want to see that in there at all. So you're looking at debt to income ratio. You want to make sure that the sales price is there, right? The value matches the sales price. Type of loan, it'll say it here, right? So if you're getting an offer on a property and it's a conventional offer, and then you look at the DU and the DU says VA, right? Like that doesn't match, buddy. Let's get your stuff together. Or if it says FHA, you want to make sure that the DU matches, okay? This is a good little number to look at too, is how much reserves does the client have? So reserves is what money is left over above the mortgage payment, the closing costs, the down payment, right? What money is left over? How much is available? Property address. Sometimes you won't see a property address in here if you're doing a pre-approval. It'll say TBD. A lot of lenders don't put in a property address until they've actually identified a property. So that's normal that you would see that, TBD, and that's not a bad thing. You want to make sure property type is correct. If it's a manufactured home, if it's a condo, you want to make sure that is correct, as well as occupancy, right? If they say they're going to live there and this says investment, or if they say, it's an investment property and this shows primary, right? That's, two different ones. So here's something that we get a lot of questions about is appraisal waivers, something we call day one certainty, right? And so here, if there's a property in the DU, if there's been a property put in here, address, the system will run and tell you if it accepts the value and if you get a waiver, right? So if it accepts the value, it will tell you right here. We're seeing less and less of these nowadays, right? But if it accepts the value, if your client's putting a large down payment down, sometimes it will waive the appraisal and not accept it. But it's much less now than what it was probably 6-8 months ago. And that changes all the time, right? So there's no way for a lender to say, hey, yes, I can waive the appraisal unless you're putting in the address, which most of us don't like to put in the address until we have an accepted offer, okay? In here, it's risk eligibility. This says it meets the guidelines, right? That's why we had that approve eligible. It meets the requirements. Cool. It will tell you risk factors, low FICO score, high debt to income ratio, bankruptcies, foreclosures, that sort of stuff. We'll tell you there if there's risk factors or if there's strengths, right? Like my guy had 11 months of reserves in there. I don't know if you remember, but in this particular case, it was a very strong credit profile that helped us out, okay? Here's some information as far as verification. So this is saying that DU did not receive data from the work number, meaning that in some cases like Disney, for example, or some county places, they do verifications of employment through a company called the work number. There's times that the lender can link that and it will show up here saying, poof, we verified the income. That is really good. In a case like this, it did not. That means it's up to the lender to verify the income, right? Again, the data entry. Here it's telling you about conditions. Here's the credit report. This is a good one to look at is when is the credit report going to expire, right? Or is it already expired? Sometimes you'll get a DU and the credit expired 6 months ago, right? You can look at that and go, hey, can you have your lender update the credit report? Because who knows what could have happened in the last 3 months. So that is a big one that you can look at in regards to just the credit report, right? Nothing can be more than, credit documents can't be more than 4 months old. That's what we want to see. That's why this date would expire. This is saying if there's a home equity line secured against the property, there's not on a purchase, right? It's just one property, so we don't have to worry about that. This is telling you loan level pricing adjustments. Again, this is more of a back-end thing, not going to impact you if you're looking at an offer or a client or verifying their pre-approval. Here's where we get into some of the meat and potatoes. On some of the meat and potatoes, right? This client had Social Security income, and here's how the underwriter wants to verify it, right? Any sort of Social Security, they're going to need these things. This is what the lender would ask them for, right? Supplemental Social Security, here's what they want, right? So it's telling us exactly what we need from the borrower to get this loan closed. Here it's saying we need to perform and document a verification of employment, meaning we send a form out or we get it from the borrower, either a written one, pay stubs, bank statements, direct verification from a third party. If they're in the military, obtain the LES if they're in the military within 120 days, right? In some cases, you can get a verbal verification of employment. Very rare. We usually want something in writing from the employer or the written pay stubs and all of that fun stuff, okay? Down here, we're saying we want to verify their tax returns. So we'll get this 4506 signed. It's telling the underwriter, make sure we get that. And again, these are all messages for the underwriter, right? I just want to show you what you need to look out for if you're working with the client or accepting an offer, okay? Here it's telling you what the income needs to be, right? So how are we verifying the income? Income must be supported by a pay stub, W-2 covering the most 2-year period, a standard verification of employment. Pay stub must be no earlier than 30 days, right? Like it literally tells us everything that we need. This is exactly what the underwriter is going to ask for. Okay. Um, Here it's saying could not validate the employment for whatever reason. This is the employer. This is saying that it did not connect to an automatic verification of employment. So when it doesn't automatically connect, you're basically banking on the lender to verify the information, okay? Here we're saying that the borrower could not validate income again. This person you could see had commissions, right? How did we verify the commissions? Making sure that there's a 2-year history of that. And you can, again, verify that that income is there, okay? And these are good to look at because when you talk to the lender, sometimes lenders, I'll be honest, they're going to give you the warm and fuzzies and say, "Oh, this client's perfect and you're good." And then you start looking at it and you're like, "Well, tell me about the Social Security or disability. Or tell me about the bonus. Did you verify that they're getting bonuses or commissions for the last 2 years?" The other thing that you can look at is, when these numbers are pretty round and it says base employment income, $6,000 a month, Social Security, $2,000 a month, right? That usually means that the lender's just estimating the number, right? Nobody makes exactly $10,000 a month, $6,000, $5,000. It's usually a weird number. Same thing with Social Security and disability. It's usually not a round perfect number. So you want to make sure when you're looking at this, if you see round numbers, 5,000, 6,000, 2,000, that's a red flag, right? You want to have a more detailed conversation because, again, it's only as good as the data you put in there. If I put they make 10 grand a month, but they really make 8,800, that's going to change my DTI. They may not qualify, right? So only as good as the data we put in there, right? No round numbers is my rule of thumb. When I see it, it's horrible. Same thing with assets. Assets totaling $107,743. That's what we verified. If you see it says $100,000 even, that's a red flag. If it says 50, like any round number, it's very rare that a borrower has an exact number of dollars in their bank account. Like I have exactly $30,000. Maybe if it's a CD, but more often than not, it should not be a round number, okay? And that's what we're verifying. Again, it's telling the underwriter if there's equity, we got to verify it with the settlement statement. We need to verify depository assets with bank statements covering a 2-month period, right? Earnest money deposit is listed. We need to verify that the earnest money deposit is there and they're making the minimum contributions. Here it even goes into depository assets, right? Like if they have a 401k, IRAs, like what does that look like? How's the underwriter going to let you use that? So again, just double checking the data. And remember, this is the blueprint for the underwriter to look at, right? Here it does a verification of the census tract of the property. It tells you if it's in a certain census tracts, depending on their income. If you're in a low to moderate income, you might qualify for different programs. It will look at it and tell you that through here, okay? Here it's telling you about an appraisal. We need a full appraisal on this form. That's what we're going to ask for. When you're doing rental properties, it's going to ask for different forms. On investment property, right? It says that it was not eligible for an appraisal waiver, right? And this actually says, because a recent appraisal with the matching property address was submitted. Interesting. That's a good thing to look at, right? Have there been other appraisals already done on this house? Listing agent may know that, but maybe the buyer's agent didn't know that. And again, this won't pop up unless there's an address in the property form, okay? This says it's eligible for a desktop appraisal. Some lenders, and you got to be careful with, some lenders may use a desktop appraisal or, to do the verification. As far as on the report, I'm not a big fan because I find that they're not as accurate as when the actual person goes out to the house. So just watch out for that because you want to make sure that you get as much value as possible for the property. Cool. This is telling you about the desktop underwriting, company name. That's something you could look out for too, right? Like, hey, the DU doesn't match the company name. Like, what's up with that, right? And then we're going to come through here. I'll walk your way through here. This is saying this person is a first-time home buyer. Here's the credit report. Here's the dates. Again, you could look at the dates. If the credit report's super old, hey, appreciate your offer. Thank you so much. Your credit report is from 2023. Can we get this updated? That's not good. Okay. Cool. Credit scores. Here it tells you the credit scores that you're using. This is another great thing. This is why we ask for the DU, right? A lot of times, because the approval letter and the lender might say, oh, my client's got a 788 credit score. And then you look at the DU and it's a 688 credit score. And you're like, huh, interesting. You didn't tell me that, right? So the DU gives you so much information. Tells you what credit score we used. Again, here's the sources of income. Again, you don't want to see round numbers. Social Security should not be $3,000 a month, right? It should be a different number. Income, assets, right? You want to make sure, like this is a round number, but this is because this is net equity from a sale, right? Like they're going to sell it. I don't know what the exact number is. It's around $110,000. But you could see all these other accounts. The numbers are all kind of weird, right? No round numbers, Joe. No round numbers. And then here's we get to the end. Again, it shows you that you're approved eligible, shows the date. I'll give you another little one up. I think at the top I can show you loan type, first mortgage, monthly payment, interest rate, value, all of that fun stuff. Here you're taking a look at your loan to value, shows you what income was used, gives you the ratios, right? This is important as these are higher. It's a little bit harder to get the loan done, so you want to make sure that the ratios are good. Here's the proposed monthly payment. Again, making sure that the client can afford the monthly payment, principal and interest, taxes and insurance, the whole 9 yards. Estimates on insurance, taxes, and then assets, right? How much assets do they have? What additional? This is a great thing to look at, especially as you're going higher on appraised value. Like, what are the assets? How much more can they make up an appraisal gap? If this says 1 month and they're saying they'll make up a $25,000 appraisal gap, well, cool, but where's that coming from? So that's good. And then it tells you again that this is approved eligible. So super important information. I hope this helps you. I'll give you one last little tip before I sign off on this, and I'm going to scroll I'll make it easy. Let me just run to the top. In here, this last little tip is submission number. So this shows you this is the first time this was run, right? This was their first. Sometimes you'll see 5, 6, 10, 12, 20 runs. You don't want to see too many. You don't want to see 25 runs on this because it could be a red flag. Pay attention to that number. That's a good tip. But I'm Joe Soto, your favorite loan guy. We can do loans in all 50 states. We're here to help. We're here to make sure that we can get clients into escrow. Also have a $1,000 credit if any clients that you're working with are already approved with the lender. If we can help them, get them a better deal, take better care of them, we'll not only do that, we'll give them $1,000 credit towards their closing costs when they do finance with us. So that's what we do. Follow me on social at the Joe Soto. Hopefully you found this helpful, and I appreciate your time. Have a great one.